Rollup, DTCC, Fidelity. The entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
You said it. You finally said it.
I'm so bullish.
Andy's bullish. I'm bullish. We're bullish. We're going to the top. We're on 4th floor today. We're going to be on floor 1, and then we're headed straight to the moon, boys.
Boom, boom, bang. It is Tuesday, December 16th. I'm in my Christmas coat. We got a banger stream today. We got our first guest, Lark Davis, ready to go. He is one of the biggest YouTubers in crypto, an educator that I feel like many of us who first got our start in the 2017, 2018, 2019 era, like myself, saw. And yeah, a lot to talk about. Namely, everyone wants to hear about the market, but I think that content isn't as differentiated as some of the stuff that I want to talk about. Token versus equity dynamics are super interesting right now, and a very hot topic. This kind of like meta DAO token holders conversation is very interesting. I think this app token layer conversation is going to be interesting. Curious to hear what Lark has to say about the markets as well, and just generally what he's seeing out there. So guys, we're going to start real quick with our first guest, Lark. We'll come back to some of these tweets and different news subjects later on in the show. You're watching Rollup TV. We'll get Lark Davis up here in just a sec and get this party started. Lark, welcome to the show, man.
Nice to see you. Thanks for having me on.
I'm digging the haircut, man. It's a fresh fade. It's the holiday fade. Man, putting yourself out there on camera every day, as we know, it requires a certain level of self-care as well as self-belief. You know what I mean?
I think I went crazy a long time ago, to be honest. It's been over for a while.
Well, man, thanks for joining. Longtime listener of the show. Man, Lark Davis in the house. We got a lot to talk about. And I was talking about that token versus equity dynamic. We got market dynamics. We've got institutional dynamics. I'd like to just give you a bit of context as to how I'm seeing things. And I'm super curious your opinion. So we've kind of started this contractionary phase within the crypto native ecosystem. So crypto native companies, protocols, projects, investors, speculators, we're kind of going through this like return to reality, this kind of trimming of the fat, this revenue, this return to fundamentals, this token holder equity dynamic, all these things. You know, what is your buyback schedule? What is the demand side for this thing? There's this very like contractionary, almost like coming to the senses of like this maturation phase within the crypto native space. So I kind of view it as like contractionary. Then in the institutional kind of realm, it's this massive expansionary regime. You've got just this absolutely diabolical desire for institutions to launch chains, launch stable coins, launch crypto products, come into the space, you know, treasury companies. And so you've got this like massive cognitive dissonance happening right now in the space, where on a 10-year time horizon, things have never looked better. But if you look at the best performing asset of this year, Hyperliquid, it's officially red on the year. And so this entire space is looking at, and I think we're all like looking around, either trying to figure out who to blame, what's going on, how to make sense of this. So, Lark Davis, how do we make sense of this juxtaposition that we
We
found
got a lot
ourselves
to
in?
cover there, and we'll just start off with this. It's been a weird year. Essentially, the majority of altcoins have been in a bear market for the entirety of the year. A lot of them sort of had their price performance back in December, January. Many of them didn't even come close to getting to previous all-time highs. Even quote unquote good coins like Chainlink, for example, didn't even come close to getting back to previous highs. So we had a lot of disenchantment. And it was very interesting because it went from this financial nihilism, which was what typified the end of last year, where everything's bullshit and nothing has any value. And that was very much the meme coins, right? Meme coins are more honest about it. Yeah, they do nothing. It's just a picture of a cat or a goat or a dog or frog or whatever. Okay, very honest. Means nothing. Most of it was scams. Everybody went into it knowing most of them were scams. Whereas you had on the other side, all of these layer 1 tokens, layer 2 tokens, governance tokens for DeFi protocols, which put on the theater of having some kind of value, but were more valueless than the meme coins. I mean, who's going to go and govern this random DeFi platform? Nobody cares. And the tricky part, as we've just seen with Axelar just sold to a bigger company. And so good for them. The equity holders just ate. Token holders, sorry, bad news. Nobody cares because you have zero rights as a token holder. And this has been a part of the big problem, which is why the revenue meta popped up this year, which great. You have a token, there's doing buybacks. There's actually some kind of reason to hold the token to hope that it'll go up in the future because there's some kind of business model attached to it that's driving real value through buybacks or revenue shares or whatever it might be. So people have gone through a big cycle of emotions with coins over the last year. And of course, most of the altcoins have proven themselves to be virtually worthless. Maybe there's about 100 investable assets across the crypto space, quite a few speculatable assets, obviously. But we've come through this weird phase where throughout 2025, most of the altcoins have been slaughtered. Okay, that's obvious. Everybody knows, everybody's seen that. We've had a few weird areas of outperformance. We had Zcash go on its run, for example, Hyperliquid go on its run. A few others had some interesting moves throughout the year. Bitcoin hit a new all-time high. ETH hit a new all-time high, but barely. Bitcoin only by about 10K. ETH only by $100, and Solana didn't quite hit a new high in the rally this year. It came about $40 short. So that was some of the biggest price action. We've had a very disappointing year for crypto. Meanwhile, people who have been disenchanted with crypto and become overly cynical with crypto, they're not coming back to play in the casino as much as they used to. No, they will when we get some green candles, don't get me wrong, but they've gone to other places. They've seen data center stocks go up 10, 20, 30, 40, 50x, all kinds of AI stock plays. So when you actually buy a share in a company, even if it's a quantum computing company that's kind of BS and might go bankrupt in a few years, at least you're playing a better game than buying these literal scam tokens that are being launched in the market by VCs who only want to extract. And God, what happened to the days? Can I just say, what happened to the days, man, when you would have an ICO and it would come out at a 20, 30, 40, $50 million valuation? Everybody had a chance to eat, man. Now it's like, oh, $20 billion fully diluted valuation on day one. Everybody's screwed. No one's going to buy it. The only people who win are the VCs who funded the seed round at 10 million bucks. That's it.
And and luckily we've actually seen some sort of return to this ICO idea. I mean, we saw Aztec this past week or two. We've seen, I think football.fun has theirs today. But still that like the core primitive of, this equal opportunity playing field has been sort of taken away. How do you reason about the kind of idea of maybe some of these tokens may not go to all-time highs in the future, and perhaps they've seen their time in the sun? Again, kind of coming back to this like bifurcated outlook on the space, right? You've got, you laid out the kind of lay of the land extremely well with regards to kind of how people are expecting the performance. Like for people who are holding different crypto assets, is there a framework that you've been using this year as to like how you want to manage your portfolio given the state of the altcoin market? Like, have you changed your views on like your portfolio management this year?
Absolutely. I think you have to be forced to change in these kind of market conditions. One of the things for me is really just there's a few altcoins I'm still holding as spot positions. It's probably not a great idea, but I'm still doing that. Something like Bitcoin or Solana. Okay, fine. That's different. I don't mind the volatility. I can hold those. The other altcoins, Anyway, it's not a good time. But for the most part, really, what's been rewarded over the last year, it's been chasing the trends, whatever the hot coin of the week or the month is, where the hot money ball is going. Like Zcash. I faded when Naval Ravikant started shilling it. It was 80 bucks. Said, it's what this old Dino coin. Who cares? Where the money's chasing. Doesn't matter what it does. Right? So there's been a bit of that. You need to be very, very, very rotational right now. And here's the fact too. The vast majority of these coins will not go back to all-time highs, and they do not deserve to go back to all-time highs. And we're not talking about random scam meme coins. We're talking about stuff like Polkadot, Cardano. I mean, look, maybe at some point we get some crazy risk on season, and Cardano for some reason goes to new all-time highs, but they don't deserve to. They're wildly overvalued at their current valuations. They have almost no users on chain. They have almost nobody using any products on their chain. There's almost no apps built on their chain. There's almost no stable coins built on their chain. There's almost no daily perpetual volumes, swap volumes, anything. They're ghost towns, absolute ghost towns. These things they're worth multi-billion-dollar valuations. So there's a bit of healing of nature that needs to come in here, whereas other things like Solana probably feels relatively undervalued. Why is Solana worth 1/5 of Ethereum when it's beating on most metrics? So there's areas of opportunity within the mispricings of some of these assets, and there's also areas of it doesn't make any sense, and these coins really don't deserve to go back to new all-time highs. Maybe like Cardano does, because it's kind of like a cult coin, but a lot of these coins probably won't, and they don't deserve to either. And there's a question that investors have to look at themselves in the mirror and say, be honest with your asset, man. What you're holding, does it actually deserve to go back to new all-time high? You just have bag bias because you're underwater and you're hoping and praying that it goes back up. Sometimes just cutting that dead weight and moving on with your life can be the best thing you can do.
Yeah. Yeah. No, I totally hear you. And it has been a year of concentration being the strategy. I mean, ever since I entered in 2017, the market always moved together. And, I remember DGen Spartan in 2020 was like, guys, diversification in crypto is the silliest idea because the whole market moves together for the most part. And the winners are they always, if you can identify the winners, they outperform consistently. So why not just hold a lot of your assets in like, the tokens that you want to own, that you actually believe in it. And I think that has continued to prove true here this year. I'm curious how you keep an optimistic outlook on the market, right? So let's kind of flip towards this more institutional, I call it Wolf of Wall Street's-esque tokenization bull run. I was in New York a couple weeks back for SmartCon with Chainlink. It was unreal. It was an absolute, it was wild. Now Bitcoin was still 105K, but it was pure mania mode, and it still is now to this day, and will still, it will still be. I'll spend a lot more time there next year. And so for a lot of us who are just in the kind of crypto sphere, we see the doom and gloom on CT. We see lack of performance from our favorite tokens, but what we don't see is what's actually happening behind the scenes in these offices, in these institutional spaces. Perhaps you can give us a bit more of the optimistic outlook here as to why you think that, or why you could be led to believe that this is the best time, to be in crypto for the long haul, given the adoption, or perhaps you don't feel that way.
I do feel that way, and it's been a very tough way to feel for some months now because we diverged from stock markets 5-6 months ago at this point, where they kept running and crypto stalled out. Then we had 10-10, the big crash washed a lot of people out, and we have not recovered from that. We are still seeing the ghosts of that event in the market charts every single day. So there's that to deal with. Then at the same time, all this has been happening, and there's been such an extreme amount of pessimism and cynicism in the markets. We have had some of the biggest announcements possible from the market. We have Vanguard getting into crypto. A year ago, they said, never on our watch. They fired that CEO and said, get everybody into ETFs because BlackRock's making too much money here. We need to get our clients in on this. So we got Vanguard.
A little late there, guys.
Yeah, but better late than never. They're late, but they're not late, right?
Yeah, exactly.
Was that Tom Lee made a good point? There's only 4 million Bitcoin addresses, but there's 20 million people with IRA accounts or whatever.
Yeah,
$10,000. So it's interesting. So there's that. So we are early to adoption for the mainstream, for the TradFi money, right? It feels like we've gone a long way because we've seen so many big buyers come in. The ETFs have absorbed so much, but it's going to keep happening over time. So we've had Vanguard, we've had Bank of America, we had Charles Schwab, we had Amundi over in Europe, which is one of their biggest asset managers. We've had all these really, really big stories. JP Morgan. Okay, now it's just these crazy, crazy stories that everybody's become totally numb to it.
I
Nobody
know,
cares
right?
anymore.
It's like if this happened in 2022, 2021, we'd be like, what? We'd be freaking out. But it's like every week now. Every week
Mhm.
there's like one of these, like today it was Visa stable coins on Solana.
Heads would actually explode back in like 2017 if you told anybody that BlackRock's going to launch an ETF and that Vanguard's going to come in and Fidelity's going to come in. People would be like, you're an idiot, get out of here. It's never going to happen. Whereas here we are with these things happening. And to an extent, we become numb to the good news. And that's very much a sign of bearish market conditions, that all this good news and nobody cares. Prices just keep going down. People keep having a lack of faith. So look, we are going through a reckoning right now. It's been a very, if this was the top, if 126K was the top, it's one of the weirdest tops ever for Bitcoin because it was the quietest top. I remember the day that we were at 126, I said, this is a really weird top for Bitcoin, or really weird new price high because the timeline's dead. I guess nobody owns Bitcoin anymore. Nobody cares. Like nobody's celebrating the fact that Bitcoin's 126K. Like normally you'd see, all kinds of posts and stuff. Now obviously there's a few people posting, but it was very, very quiet because there was no altcoin season. People were not broadly making money. Most people were basically screwed. So you had Bitcoin top barely, no altcoin season, where we're also now heading into this weird situation where there's been no business cycle breakout because the US PMI manufacturing index has not broken out over 50 and sustained. We had 2 months where it was above 50, just barely back in January and February, and then it fell back under 50. So there's been no breakout in the business cycle. Normally it takes about a year for the business cycle to actually reach its peak. Hasn't happened. Okay. So it's been a very weird cycle so far. Normally Bitcoin tops with the business cycle. Whereas this time Bitcoin topped without the business cycle. If we topped, and that's truly the peak of peaks, and we go down to 40, 50K by October next year, which is really not even that far away, guys, in the grand scheme of things.
But that's what Ben Cohen's calling for.
That's a lot of people. Technicals would say, this is the thing. If you believe in the 4-year cycle, it's simply all that has to happen is for 524 or 530 days need to pass after the Bitcoin halving. That just simply marks the top every time. Ignore the fact that it always topped with the business cycle. Ignore the top that it topped with the credit cycles. None of that stuff matters apparently. Ignore the fact that in 2021, when Bitcoin topped, it partially topped because the Fed started talking about a tightening cycle and rate hikes and all this stuff. None of that stuff matters because 524 days passed from the day of the Bitcoin halving. Therefore, it's all over and buy Bitcoin at 40K in a year.
So I'm getting the vibe that you're not a believer in the 4-year cycle this time around. So, this is another interesting kind of like, I keep using the word juxtaposition where it's like technicals are saying rounded top, DATS, ran out of steam, markets topped on apathy, tough time. Fundamentals and liquidity flows are suggesting rate cuts coming, QE starting, business cycle kind of hasn't even really started in this regime. You could make an argument that 2026 is going to be the most stimulative monetary policy year since 2021, just basically off the last 5 years of kind of a restrictive policy. But yet here we are, and it sure looks like this time is not different.
No, that's the crazy thing. But ironically, to argue that this time is not different is to argue that this time is different. That's the tricky part about it.
Explain.
Because the things we just talked about. If you're arguing that this time is not different, well, it's different because normally Bitcoin tops to the business cycle. Again, we're just making a basic argument that 524 days have passed since Bitcoin halving, therefore it must top. Okay, and look, had 1010 not happened, we'd probably be in a very different place. The market makers have been aggressively just wrecking the market every second that they get because they probably lost tens of billions on that day. I can only imagine. So we have to deal with that. But there's a lot of reasons why you'd say, okay, well, this time is different because we didn't hit any of the top signals for Bitcoin. None of there's like 30 on-chain indicators. Not a single one of them got hit as a topping signal. Okay. So this time's different, except that 524 days passed, right? So then you have, of course, we've lost the 50-week, we've lost the 200-day, the monthly MACDs trending down. Like these are all bad things on the technicals. And this is all screaming that we are currently in a bear market. The question is, what kind of bear market is it? And that may be the thing that actually tricks people. That may be where we find out. Because this is the thing, everyone's expecting it's going to be a year-long bear market.
I don't think it's going to be. I think if this bull market was so different, you have to assume that the bear market is also going to be different.
It would really mess a lot of people up if we had a 3 or 4 month bear market. We didn't go much lower than like 75K, for example, or something like that. Remains to be seen exactly how it's going to play out. If you just go with the traditional way of, okay, a 4-year cycle, X% drawdown afterwards, none of that, nothing else really matters, then yeah, we're probably going to see Bitcoin bottom October next year at 40 to 50K, around the somewhere around the 200 week, which is around 55K right now, maybe dip a little bit under. And that's basically it. Some simple process. And then we try to run the 4-year cycle next time. And next time it doesn't work out. But here's the thing is that the 4-year cycle is a very interesting narrative, but the 4-year cycle has been primarily driven by the liquidity flows, right? And so right now, to argue that the 4-year cycle should simply stay in play because it's always been in play, you're essentially arguing that you're fighting the Fed. Again, we want to talk about this time is different. What's the grand rule in investing? Don't fight the Fed.
Yeah.
Everybody's saying, no, I want to fight the Fed. They just ended QT and 10 days later instantly capitulated and started. It's not quantitative easing. It's reserve management. It's not QE, guys. It's reserve management. Okay, we're not going to use the 2 letters. But they're buying back $40 billion of treasury bills a month. And the estimates from the big banks are that they're going to buy up to $500 billion of T-bills next year. That's massive stimulus. Massive. That's an environment where Bitcoin tends to thrive. Plus, you got a new Fed chair coming in. Trump's litmus test is, will you put rates down to 1%? Yes or no? Basically.
Yeah.
So you're fighting the Fed. This is the thing.
I think
it's a very interesting place to be.
There's a bit of like, there's a bit of patience required here, right? I think, that the Fed chair is probably going to be elected, in the next 60 days or so, 30 to 60 days. That should be a nice like boost for the market's sentiment, but that won't actually take effect till May. Then the actual effects of the QE and the rates, they probably won't really kick in till middle to end of next year. I don't know. It's going to be very interesting to kind of watch play out. I think we can speculate as we want. I think like the important thing is to make sure that for those listening, you've got your tax capital allocated for this year. You're nice and cozy, and you can weather whatever storm or good times are ahead. So, Lark, kind of shifting off of the market, speculation and just kind of like where we're looking. I'd like to get your take on this token versus equity dynamic here. So you mentioned Axelar, right? So let's just start with them as this example here, but just this broad problem. I'll give some context in the tweet, which is basically or a tweet that I saw. He's like, Grant from Blockmate said, I think a major trend going forward will either be no token or tokenized equity. Anything in between will be uninvestable. And so for those watching, basically we had this regime with the SEC where you had to create a foundation and a labs company. The foundation was usually in the Cayman Islands, and the labs was kind of wherever, either in Switzerland, in the US, Singapore. And basically the labs was the development company for the foundation typically. And so, I'm just curious your take on how you see these companies playing out in the future, how you kind of think about this transition. Because again, it feels like the gig is up on the token plus equity dynamic. How do you think this changes over the next couple of years now that we're in a better regulatory regime?
I think the market's told us quite clearly. The market's sick of it. They don't want to buy these overly inflated, useless governance tokens for VCs anymore. Back in 2021, you could throw money at basically anything, it would probably go up. Okay, especially hot new coins hitting the market. Now, it's just not been the case. The market's smartened up a bit to that reality. And therefore, people are not wanting to take these useless tokens anymore. Well, it's a utility token, a governance token. Yeah, why don't I get some actual stake in this? Which is, of course, why the revenue meta has taken off with, Pump Fund and Hyperliquid and all this kind of stuff. I know, what a crazy idea, right? Companies that actually make money.
I need to get some revenue meta hats. I think they're
perfect.
Coming. I think they're coming.
Yes.
So,
but I understand the frustration from investors. That's I've been in a lot of those deals and they've sucked.
I mean, our fund angel portfolio is looking really rough, to be honest. I think that goes for a lot of people. So the market is tired of this. Hyperliquid also helped to really push this forward, where it's like, all right, guys, we're going to do things this way. We're going to be buying back with 99% of our profits, and you guys can figure the rest out. Obviously, they were highly rewarded this year. So what does this look like going forward then? Let's say, so Axelar obviously got acquired by Circle, leaving, I think, to be the token holders in the dust completely. So how are app tokens even investable then? Because if you can just sell the equity to and get bought out, and the equity holders own the equity, which is likely the founders and any of the investors who did a safe plus a token warrant, what is the incentive to buy app tokens?
Very thin. It's a very thin incentive. This is the thing. You have to maybe you take someone like Aave, for example. I would be very, very surprised if Aave sold out and left the token holders in the dust, right? So then you got to be okay, you got to trust somebody, right? You don't have any sort of legal representation in terms of a token holder. So the only way forward really is to have better ICOs where when you buy a token, it gives you some kind of digital rights to the company as a shareholder. That's probably the only way it's going to make sense. And until we start getting more of that, a lot of altcoins are uninvestable. That's why I said there's maybe 100 investable assets in crypto right now, and the 100 number might be generous.
Yeah. I mean, this dynamic, it's hard to overstate how much Fugazi, Gary Gensler's regime forced on this space. So maybe we can flip that on its head. I just saw SEC Chair Paul Atkins will be speaking at Digital Asset Summit in New York City this upcoming year. He's gone on and said that they're going to bring all markets on chain in the next 2 years. Larry Fink is saying tokenize everything. So it remains more and more clear that the big investable category right now is this tokenization RWA category. The issue here, though, Lark, is people like you and myself, we don't necessarily have access to these deals. We don't have access to the Tempo deal. I mean, we don't have access to the, whatever it is, Circle's ARC deal, or we don't have access to some of these. Like, I guess what I'm getting at is if I asked you how to get exposure to stable coins, you could say Ethereum, Plasma, Stable, Circle Stock, and there's a couple others. But like, this is a mega trend, and people in our community are kind of PO'd because they're like, well, how do we even get access to this? This is clearly the dominant investable narrative of the entire sector. Payments, stables, tokenization, but how do we even invest in this?
That's the problem. You can't, outside of the few options you listed. And okay, investing in Ethereum or Solana because of stablecoin adoption, that's just like one of the many reasons why you may invest in those assets, right? Circle stock, I mean, felt kind of overvalued when they came out, and with interest rates going down, I'm not sure that's a great buy. And so that's it. You're left with a few protocols. Athena's got absolutely whacked since the 1010 crash. So you're left with very few options. And the problem is, what you just shared about Larry Fink and Paul Atkins. Oh my gosh, RWA is so incredibly bullish. We're going to have trillions of dollars on chain, and I'm going to be able to take a mortgage take my house mortgage and put it in Aave and earn stable coins and all this stuff. But you know what? There's no great way to invest in that. Sorry. Oh, I'm going to buy Ondo Finance. It's a governance token. It's a governance token. You don't capture any upside. You don't have any legal rights to the company or anything. That's a freaking governance token, man. Ondo, super bullish protocol, doing all the amazing stuff. You as a token holder, sorry.
Yeah, man. Man, so I know that you were, somewhat active in the AI crypto kind of trend that happened at the end of last year. I thought that was going to come back a bit, like, a yearly kind of cyclical thing where we would see it kind of pop up again. Completely has not. I mean, Near is doing a great job of capitalizing there, and a couple others, but price action and just general flows or interest in the AI crypto construct is pretty much at all-time lows.
Basically, look, but that's basically everything. I mean, we've had, again, a few things like perpetual swap dexes that had their little moment in the sun this year, but
even that, Lark, we've seen these for freaking 5 years. We saw GMX, DYDX. Like, it's like
nothing new under the sun. When people come out and say like, oh, we're doing InfoFi or SocialFi, prediction markets. We were doing prediction markets back in 2017, guys. Come on. It's nothing new.
But again, like, this sentiment, I try not to get pigeonholed into this sentiment because I know I'm going to spend a lot of time in New York next year, and I know it's going to be a massive, it's just this expansionary regime. It's just that same issue of like, all right, well then how do you benefit from, BN or BKNY or whatever it is, getting a $2 billion offer from Circle or Stripe or whatever it was? Like, well, you don't. It's like, it's this really weird dynamic right now, and it's causing a lot of apathy. It's causing a lot of apathy.
Because you're better off buying of stocks and data centers and AI and space companies and biotech and stuff right now, because you actually have real shares of a company. Until we make the token model better and we see broader access get rolled out to regular investors, which is going to come. I
Yeah.
think Coinbase and others are working on those very things. I think we'll see more regular investors get a chance to get a seat at the table, which will be a good thing. But for a lot of this stuff, it's not going to be the case. And for a lot of the best ideas happening in crypto right now, we have to accept we invited Wall Street in. Well, they invited themselves, but they still came. And now they brought all their tricks with them. And that's part of the process here, is that they're going to be doing these things. They're going to be making their own little things, making their own little deals. And no one's really going to be invited except for, Naval Ravikant and his buddies, and that's the San Francisco money crowd. And they're always invited to everything. So it's not really different than things usually play out.
Yeah. So Lark, then I guess to kind of put this into the perspective that I've been thinking about it is I've kind of structured in my mind, like there's this 10-year Silicon Valley outlook towards their investments, right? They go into these deals and they're like, these are exponential type of deals. And Haseeb put this whole thing about exponential investing. And I think if you're a crypto bull, you have to adopt this mindset at the current phase where it's like, look, guys, these are exponential technologies. We're in decade 1.5 of the biggest crypto asset. We're in decade 1 of Ethereum. Guys, if we're in this for the next 2 to 3 decades, then, that's kind of the 10-year, 20-year vision that you have to have with some of these kind of like liquid venture bets. But at the same time, you've got to be extremely, extremely, extremely kind of paranoid and pragmatic about like what it is that you're holding, and like very, very understanding of what it is you're buying and holding on to. So I guess like the way that I've taken these two outlooks that we've kind of built the context off of for this conversation and applied it to the investing side is like, all right, here's stuff that I want to just take a 10 to 20 year bet on and look back. And I don't want to be like, I sold Amazon in 2002, and I don't want to be like, I sold Tesla, in 2011. But at the same time, I also don't want to be the guy holding Enron and the guy holding, MySpace. And so it's like, it's kind of this apples to apples with some of the early tech companies that I've been thinking about this. And I think it would help a lot of people to take a 10-year view on their really strong convicted crypto asset bets. However, being very paranoid, pragmatic, and being willing to adapt their theses along the way.
It's a good idea. The problem is that there's very few assets you could realistically consider holding for more than a year in crypto, maybe more than a few months in crypto. And that's just the harsh reality of it. I mean, the AI agent thing, great idea. All these AI agent things, even virtuals, great idea, great platform, token slaughtered. Will it do well in 10 years? May not be here in a year. Hard to say.
Yeah.
Whereas you could look at, okay, Bitcoin, Ethereum, Solana, okay, 10-year bets, sure. Apps, Aave, Sky, they're probably going to go the distance. Chainlink, probably going to go the distance. We start running out of names real quick, though, to be honest. And that's the problem. If you're going to go out and buy Monad, for example, gosh, so much hype, Monad, came out, boom, instantly down, launched at a terrible time, a whole bunch of reasons why things will do what they do, but did we really need another layer 1? I mean, really? It's 2025. Your idea is to launch a layer 1 blockchain? We already have like 900 of them, and only 4 or 5 of them have any users. So is Monad going to be the next Amazon? Is that the one that we hold on to for 10 years? I have my doubts, right?
Yeah. But you do agree that there is a next Amazon that is in front of your face, and that you have to be able to, like, the winners will be the ones who are able to hold out.
Absolutely. Yeah. I think the name of that's Solana, by the way.
Really? That's your that's your Amazon bet.
Potentially. I feel like that's one you could hold for years. Although that being said, if we do get some kind of big season in 2026 and it goes to like $500, $600, take the profits, rebuy it in the next bear market.
Yeah. Last thing for you. Do you think so XRP has kind of been like this massive polarizing asset, let's say, for various reasons. Seems like this year they've really capitalized on this whole let's just say like crypto legislation, political environment, etc. Chart looks pretty rough. I don't know what's going on over there. What's your take on XRP? Do you think XRP is going to survive for the next 5 to 10 years?
Probably. Look, I've never been the world's biggest XRP fan, but I'm also not anti-XRP. People like freak out. Oh my God, you don't own XRP, but don't you know about all? Like, yeah, I know. You guys tell me all the time. I've looked into it. We'll trade XRP when the chart looks good. It's fine, man. Now, look, XRP is a very interesting one. Will it be here in 10 years? Probably. Does it deserve its current valuation of some mind-boggling number? What's the current market cap? Let's have a quick look here. Current market cap is $116 billion. No, I don't think it deserved its $170, $180 billion market capitalization either. Now, RLUSD is gaining traction. It's got about $1.3 billion market cap for their stablecoins, so that's not bad, right? And there are RWAs coming on chain and stuff like that. But I think the market is pricing in some unbelievable future for XRP. Now, again, not anti-XRP. When I learned about XRP back in 2017, I said, that's a cool idea. Now it's like, but why wouldn't I just use Solana to send USDC for a fraction of a penny? What do I need XRP? But the banking partnerships, man. Don't you have the banking partnerships? Yeah, okay. But they're stable coin. Yeah, we have a whole bunch of other stable coins too, man. What do we need our LUSD for? Like, its value proposition in 2025 is just not what it used to be. And you got to be honest about that. That's why, like, I'll trade it, man. I'll date it, but I ain't going to marry XRP.
What about the XRP Chainlink rivalry? How do you feel about that one? That'll get the people going. I think Chainlink's gonna mog them over the next 10 years. I think Chainlink dominates, but I don't think the XRP army is gonna feel too fondly about that. What's your take on this? On who really owns the Swift banking partnerships? Who really owns?
Apparently, Linea. I don't know if you saw that. Apparently, they got a big Swift partnership as well. But anyway, I think Chainlink is an infinitely better asset than XRP. Okay, guys, come on. Just relax. Relax, okay? I don't own a Chainlink currently, but I think it's an infinitely better asset. Their CCIP technology is incredibly persuasive. They've got the great partnerships and all that kind of stuff. But more importantly, XRP is very much a silo, right? They've got everything going on in their XRP silo, and it's really not that much going on if you look at the daily user metrics and stuff like that. But okay, sure, they've been around for 10 years and still don't really have that great of a user base, but they got a lot of holders and people are really excited about the vision that Brad and Chris, push out to the world all the time. So I get it. I understand why people invest in XRP. Again, it's not a very persuasive asset for me, but I understand the reason why people do. And if they pull it off, if Chris and Brad really pull it off and make everything magical happen with XRP, man, it's going to go to, I don't know, $10 or something at some point. But anyway, but Chainlink, I know. But Chainlink, though, gosh darn it. It is one of the most fundamentally important protocols in the entirety of the cryptocurrency industry. Okay. Yeah. And that's a very, very different value proposition. It's everywhere. It connects to every silo, essentially. And it has the infrastructure to make all the silos talk to each other and bring assets, move corn from silo to silo. It's a pretty amazing piece of technology. And now they finally started doing buybacks and stuff like that. So now there's finally, after years and years, some kind of reason to own it finally. So I think Sergey is very much aligned with the things you like in crypto, the decentralization, the good tech and all that kind of stuff. I think he's the right kind of founder with the right kind of vision. Whereas I feel like Chris and Brad have really they've made so much money selling XRP. They made so much money. It's crazy. They're both billionaires just from dumping XRP continuing in the market.
Weekly dump, just a monthly weekly dump is insane.
Man.
Yeah, man. Lark Davis, man. What's the rest of your week look like here? You got a busy one?
Just grinding out some videos before we get to the holiday season. Basically, gonna try and take a good week or so off. I might sneak in the occasional live stream if something exciting is happening, but try to take off a little bit of time over the holidays, but still, grind out some videos, get some stuff pre-recorded. Got some juicy ones coming, like the Bitcoin Epstein connections. That's gonna be fun.
Where can our audience find you, Lark?
Just come over to X, look for Lark Davis. I'm there. You'll find me. We're always sharing charts, talking about stuff, having a good time. So I'd love to see you there.
All right, man. Thanks for joining today. It's been a fun start to the stream. Appreciate your time and your content and just general contributions to the space, man. We'll see where we end up. We will see where we end up. Talk to you in 3 to 6 months, hopefully.
Peace.
Peace, buddy. Bye. Alrighty. Well, that is Lark for you. Absolutely a character and has a lot of takes, a lot of things to say. One of the bigger YouTubers in all of crypto, and that was a fun conversation. I think we probably agree on a lot of things, but you can feel the sentiment. Like, you can feel the, I don't want to say it's like overly negative, but you can
Really
just kind of
negative,
feel
but you
how,
can just kind of feel how
like
just
the sombering,
like
of
the
sombering of the reality that is setting into this space is very real. Like the somber reality of like, oh, it's not just up only. It's not just going to be, you know. So I'm choosing to be optimistic, guys. I'm choosing to be bullish. I'm choosing to be in the institutional bull camp. I'm in the short term to bear camp. In the short, that is where you're going to get screwed. Is if you're in the short term bear camp. Is if you're in the short term. I'm choosing to be a part of the Wall
I'm
Street
choosing to be a part of the Wall Street
NYC Wolf of Wall Street,
NYC Wolf
crawling
of Wall
into the
Street's
office,
crawling into the office
bull run,
and
I encourage you guys to do the same.
I encourage you guys to do the same,
guys. That's the only way That's the only way I'm keeping my head on my shoulders amongst the pump fun induced insane token dilution that has happened in this market. So yeah, this is the state of affairs. This is the state of affairs. Looking at the charts, I mean, I don't know, it doesn't even matter. We're not even that really short-term oriented here on the roll-up. We've taken so many long-term angel venture bets, as well as just like have long-term core positions that we established in 2019, 2020. So we're not really short-term, but yeah, it doesn't look great out there. But that's the reality. That is a sombering reality brought to you directly by Lark Davis. Up next, we have Andrika Bernatova, founder of Dynamix. Interesting company here, energy-oriented, and just kind of has probably a lot of business going on at the current state of affairs, given the data centers and given the demand for power, electricity, and more. So, guys, without further ado, why don't we go ahead and bring Andrika up to the stream and get this show on the road. Let's get started. I am so sorry if I'm butchering your name. It is a beautiful name, but I can't imagine I'm saying it right. Could you help me out here? Andrika. And where are you from, Andrika? All right. I'm a big Prague fan. I'll tell you that. I've had some good times out there in the Czech Republic. Good to have you calling in here. We're talking energy. We're talking Ethereum. Before we do, would love to just hear about what Dynamix is for our audience, just so that they can get a bit of context. And then we got tons of different things for energy, for AI, Ethereum, etc. So what is Dynamix, and kind of what is your role there as the founder?
So thank you for having me, first of all. Really exciting. So Dynamix has two separate platforms. So we have our SPAC platform, and right now I'm the CEO and chairman of Dynamix 2, essentially, or Dynamix Corporation is the official name, where we recently in the summer announced a merger with the Ether Machine, Andrew Key's company, obviously, who's been one of the founding founders of the Ethereum space. We actually, and at the end of October, we took our third SPAC public called Dynamix Corporation 3. And I'm the CEO and chairman there. And we are right now searching for another merger candidate for Dynamix 3. And then separately, we have our private platform that is separate from our SPACs. That's called Dynamix Capital Partners, where we look to partner with companies on the private side, generally sort of looking at $50 to $150 million equity tickets. And that's generally in the sort of energy and infrastructure ecosystem. That's in vogue right now, but it's been around for hundreds of years. It's just people are noticing it very recently.
Yeah. And congrats on the $200 million raise, or just over that, for Dynamix 3. This is awesome. So if I understand that part correctly, we'll go backwards here. That is where you guys help companies go towards a SPAC listing, right? Is that kind of
towards a public listing? That's right, Andy. So with Dynamix 3, we are listed on the NASDAQ. And so what we do is we raise the risk capital first that supports the initial IPO of the SPAC that you just mentioned, the $200 million raise at the end of October. And so we have that about $200 million in the trust as cash, and are now searching for a merger with another company with an operating business. And through our SPAC, that business is going to, likely go public. We'll be hopefully able to contribute capital into the combined business.
Very cool. Very, very cool. All right, let's talk energy. Let's talk AI. Let's
Compute
talk demand situation that has just been absolutely exponentially increasing. I remember speaking to a couple AI crypto adjacent investors, as well as just some AI investors in Silicon Valley about two and a half years ago. And I was just basically like, guys, if there's a dependent variable that we can create as kind of like a constant function for what your investment thesis will be kind of centered around for the next 5 to 10 years in these categories, kind of like, what is that? And the overwhelmingly consensus answer was simply the demand for compute is just going to keep increasing. So it's basically do with that what you will. Think about, like this first and third order consequences of this. And then you've got a, relatively firm investment thesis for this, category. Now, of course, that is true until it isn't, but we are not there yet. And I'm not sure if we'll ever be in a world where demand for compute really dries. Perhaps it'll come in some sort of specialization, or if we create better chips or better models that don't need as much compute, et cetera, I'm sure there could be some innovation there. But for the time being, the last 3 years, that has rung extremely true. Talk to us about what this kind of compute equation looks like today. Kind of maybe catch us up over the last couple of years, and what you're seeing looking ahead for this demand side of the for compute from the AI perspective.
Yeah, obviously there's a lot of hype around AI. Like you said, it's sort of interesting because we've had obviously continued demand and increased demand for energy, whether it's fossil fuels or whether it's renewables. It's really anything at our disposal that has been, driven by just the growth of industrials, growth obviously of cloud in the recent years. And now we are entering sort of this new AI ecosystem. The difference I would say actually, Andy, between maybe the last waves of energy versus this one is just the quantum of energy and power that's required is just, orders of magnitude of the past. And I would say the second component is also the demand for power, on its own, right? So sort of the utilities power space has generally not been a space where folks are looking to enter if you are graduating at the age of, 22 from college or 25 from business school. It wasn't necessarily a career that you would want to envision yourself for decades to come. And I think that has changed. I mean, it is, the entire ecosystem from energy extraction or production to transportation, the pipelines and the wires, to power production and then power distribution. I think that is what we view from our perspective. That is the single biggest element that's essentially going to drive the growth or maybe slow down the growth of AI, of this AI ecosystem. So, I am addicted to AI. I'm sure you are. And if we are, then, my kids certainly are. And the generation below us, it's just going to be hey, they will not be able to, imagine life without it. Just like we can't imagine life without internet.
Yeah.
We can't imagine life without, iPhone, as the same way that how they are viewing, AI. It's part of school system. It's part of everything we do in our daily lives. But the single most important component from our perspective, obviously you have, chips on one side, but really what is going to drive everything is the energy and power infrastructure around AI.
Yeah. I'm curious what you think the most realistic energy stack is for supporting this kind of hyperscaling of AI. Is it non-renewable? Is it renewable, natural gas, microgrids, solar? Even kind of how do you think about the energy stack powering AI? You've got Elon and the guy from Google, I think, talking about creating data centers in space. So clearly, people are thinking about where they're going to get their next batch of energy from, which I think is a bit absurd. But how do you think about the growing energy stack for supporting hyperscale AI?
You know, in my next life, I do want to be Elon. You know, I definitely lack the you know, the visualization, the way that he sees the world. I am just a crude realist here who was brought up in a, you know, hardcore communist country a few decades ago. So a very different approach. I mean, you know, so I can't comment on sort of the more futuristic visions, which very well may be true, honestly. But I'm thinking about the next 5 to 10 years, right? In
Yep.
my very active sort of professional lifetime, what's going to happen? And the reality, Andy, is would we like, I think all of us would, you know, including the guys in the oil field, by the way, I think everybody would generally like to have a cleaner environment. That there's, you know, nothing I would say severely controversial about it. If you can have a choice between clean versus not clean, I think you always go in that direction. But the reality is that is just not something that's practical over the next 5 to 10 years, right? And so what we have seen a shift is essentially in the 2020 2021 timeframe, everybody wanted green and clean, everybody wanted
Yep.
solar and wind and geothermal. You know, now we are kind of mesmerized by, I would say, the nuclear component. And so, you know, hydrogen, right, it was very much flavor du jour for a period of time. And those are all, I would say, additive sources of energy. But if you really think about, you know, I'm concerned about not whether we are going to decarbonize in 5 years. Those are others that have a task at hand that, you know, are going to, you know, develop a transformational technology that ultimately is going to change the world, and maybe we will not need oil and gas at that point. But I am concerned about decarbonizing over the next 5 years, right? That is something that's possible, that's you know, very executable. And you know, if you think about it from that perspective, gas is really the solution at scale. So what gas solution provides from a power perspective is, one, decarbonization versus coal, right? So that's number one. Number two, it's a sort of subset of energy that's attainable in the short term, not decades, you know, in 5 years or in 8 years solution. It is a solution that's very executable within, you know, months. And then the third piece, and that's very important, Andy, in this energy solution these days, specifically for AI, is resiliency. You know, you need 99.99% of reliability. You know, unfortunately, the renewable sources that we have available today are not generally, you know, the best source for that resiliency perspective. And on top of that, of course, what you have is more severe weather patterns, whether it's cold or warm or hurricanes or whatever it may be. You know, we really need a solution that's in the ground, that's stable, that's available even, you know, during some of those more dramatic events that are not just prevalent in the coast of Louisiana and Texas. It's really prevalent in parts of the world where you didn't have those weather disasters before. So I would say gas is going to continue to be very scalable and prevalent over the next 5 years. And, you know, we are, of course, going to be continuing adding renewables, whether it's solar and batteries and, you know, wind and others. But we need to be mindful about actually creating solution over the next 5 years, not
Yeah.
in 5 years.
Yeah, I think you know, I can't help but think that this kind of general decarbonization concept sounds extremely impactful from a conservatism and an environmental perspective, but falls kind of weak in a perspective of hyper capitalism. If I don't really care about, you know, the impact that I'm having on the you know, O2 layer or the ozone layer with my work, then I'm just going to do what you know, what I can to outcompete you because you do care, and then I simply will. So is that wrong? Like how does your kind of let's just say like altruistic kind of motive here behind the energy and your thesis around that, how does that actually relate to the unit economics of other sources of energy that perhaps are a bit more destructive and perhaps require or produce more carbon?
Yeah, I think it's sort of interesting. So two things I would have to comment on that. When you actually look how much money has been spent in the renewable space and who spent that money, you will see that the large oil and gas companies are the companies who spend significant amounts of money, whether it's hydrogen, carbon capture, obviously wind, solar, etc. You know, geothermal, right? And those are also the companies that are probably the best equipped, Andy, to take renewables to the next phase, right? Because those energy is very capital intensive business. You just can't produce energy from nothing, right? And so it is very dangerous business. And so, the oil and gas companies are the companies who are every oil well or gas well or every piece of infrastructure. If you don't do something correctly, somebody may die, right? I'm sure a lot of folks have watched the Landman episodes recently, and I thought, obviously exaggerated, but it did bring a very interesting light into the oil and gas business, and that's very transferable into renewables. And so, and at the end of the day, I would say the third element, it's obviously oil, gas, volatile commodities, similar to the renewable commodities. And so I would say that's another phenomenon where you have people who've played in that space for decades. So I would say that number one. So who are the people who actually will play in renewables? It likely will be the people who played in oil and gas from companies and investors perspective. I would say the altruistic piece, it is, I think we have to be always mindful. Do we want a clean solution? The answer is yes. But if the solution is not economic, it is just not fair to be, sacrificing, availability of energy versus the, clean energy. I mean, maybe in, Santa Barbara or Beverly Hills, that's, some of those solutions are very viable, but not for, a regular person, whether it's in America or whether it's in Europe or whether it's in Africa or around the world. That is a really important equation that we have to think about. What is the economics and the availability of energy for the, end consumer from India to Brazil to Oklahoma?
Yeah, totally. Yeah, I appreciate that explanation. I think that kind of cleared up my question there. Coming to the Ethereum part of the equation, so ticker ETH-M, you guys mentioned that you collaborated with our friend of the show Andrew to kind of bring this company together. So is the right way to think about this company like a dual-sided bet on Ethereum and this growing compute demand, kind of energy demand equation? Like, what is the right way to think about your company as far as like what shareholders are investing in, or what potential investors are looking at? Not financial advice here, just trying to understand what the breadth of the scope of this investment is.
So the Ether Machine and Andrew, that company is housed, it's a merger that's specific to Dynamix Corporation, which is the one of the SPACs that we have. And so that's going to be, it's a clean vehicle. What we really like about the Ether Machine is one, obviously, Andrew and the team have been doing this for a decade, and so they're well versed. They're doing this full time. Andrew obviously is contributing about 150,000 of his own ETH, which is significant holding in the space. So he's very dedicated to the company over short, medium, and long term. And I would say that the fact that we have a sort of a clean vehicle that's not burdened by sort of some historical components, it makes it very, very easy. We've raised 2.2 billion of equity capital, so gives it a very solid footing and start. Now, I would say thematically, Andy, what does Ethereum have to do with energy and power and AI and all that? Interestingly enough, there are a lot of similarities between the two spaces. So both digital assets as well as energy infrastructure are very capital heavy. You can't invest 20 million and create 20 billion. You will need continuous deployment of capital in order to grow both sides of those business, both ecosystems. And it's obviously very technically heavy on both sides. But I think the most critical piece, and that's why we really like partnering with the Ether Machine on, with Dynamix Corporation, was the fact that both industries we view as mission critical over the next 5 to 10 years. You cannot live without energy and power. We would like to, not possible. And in similar way, we view the crypto space and Ethereum specifically. I mean, the way that it's going to change, and I know your viewers and you guys are well versed on that topic, but I meet 99% of the people I meet, whether it's a end consumer or whether it's multi-billion-dollar family offices or very, very large institutional investors. The space has it's really in its early innings, right? There's a lot of misunderstanding or not complete understanding what crypto is actually going to mean over the next 5 to 10 years and how it's going to fundamentally change our lives. Similar way Andrew says this pretty publicly, similar way that internet did for us or iPhone, right? We are going to just the way we transact, the way we think about contracts. I mean, taking a step back, every day for you or I or anybody, unless you live in the desert by yourself somewhere, but it's just series of contractual decisions. And, we don't kind of think about it because we got used to the way that we function. But, in 5 years or 10 years or whatever the timeline is, those contractual ways of, just working on a daily perspective is going to look fundamentally very different. So I compared, Andy, and I came to it as a newbie, right? Earlier in this year, I haven't lived in this kind of crypto ecosystem for the past decade. But the interesting thing for me was when we think about landline phone, right? So we were able, you and I, we could call from, New York to Boston. Hey, how are you doing, Andy? Are you having a good day, etc., through a landline, right? We are now doing it obviously via phones and, whether it's different apps, WhatsApp, phone, FaceTime, whatever it is, we see each other now. We couldn't see each other. Maybe that's a bad thing in some cases that, you see the other person. But the point is we still just communicate, right? It's just a communication form, but it's fundamentally totally different. So that's how I view crypto and that's how I view Ethereum, is that we will be doing the same things. It's not like we're not going to be transacting, but it's going to be so different in terms of the way we'll do it. And Ethereum is, we view as going to be the backbone of that exercise.
Yeah. Let's get a bit deeper into that. So, I think Ethereum has its role in this emerging AI energy economy that is really growing and is set to really grow continuously over the next 5 years. I think how is still yet to kind of be determined exactly like how Ethereum fits in. But I'm curious from your perspective, from working with Andrew, from your expertise in the energy sector, how do you see kind of like this AI energy economy intersecting with blockchain and, whether it be Ethereum or others, how do you see these actually playing out from your, expertise in energy? We've seen different like supply chain examples. We've seen, the typical kind of like removal of the middlemen from a contractual perspective, from a supply chain perspective. Obviously, just like the verifiability and the provenance of blockchain allows you to have kind of like this immutable ledger. Talk to us about how you see energy markets and Ethereum kind of intersecting over the next 5 years.
Yeah, I think, obviously the growth of AI is underpinned by energy and by the trust level. And so we talked about energy previously and the trust level, we do think the Ethereum ecosystem is going to be critical for that. When you think about, it's been really sort of refreshing to see large institutions like the BlackRocks and, obviously more recently, Jamie Dimon. I was kind of like in his camp for a long time. If Jamie says this doesn't make sense, therefore it doesn't make sense. And obviously, we changed our mind with Dynamix a few months ahead of Jamie, actually. But anyways, long story short, I think the institutional sort of embracing that is huge, right? Because you are essentially either going to play along the crypto ecosystem or be excluded. And so there will be obviously role of financial institutions in that space. But I think at the end of the day, Andy, the way that I really see the space having impact is the general consumer, right? Is the guy, whether he is a plumber in North Dakota or whether he is a train driver in the Czech Republic, is actually we need to sort of educate and push the usage. And that could be, as you mentioned, right? I mean, cutting off the middleman, the apps that we are now using for transportation or accommodation, etc., and everything else. It's the mortgages. But I think what's also interesting about the crypto space, it's going to be more catered towards to what you, Andy, like, right? Or want, or when do you want it, right? I want to have a chamomile tea at 6 a.m. on Monday mornings, and it's going to cost me more at 6 a.m. than at 5 p.m. on Tuesday. And so there's going to be a much more customization to what our needs are. And I think that's going to sort of enable more of a velocity, right, of transactions as well. So I think that's going to be the end impact, one of the end impacts as well, in terms of the mass consumer really embracing the space. And Andrew, and we talked about this quite a bit, is that end consumer is cutting off a lot of the middleman, and the processes that we now have to go through, and the transparencies that we don't necessarily have now. That's going to be the game changer, whatever time frame that may be.
You heard it here first, guys. Ticker is ETHM. Andrew has committed 150,000 of his own ETH. He is an Ethereum OG and legend. You've got the energy expertise here of Miss Bernatova. Energy times Ethereum. Dynamix, thank you for your time. I've been watching some of your latest shows on the media tour, CNBC and CoinDesk and some of these others. So good on you for putting the word out there, and I appreciate you sharing some of your insights with us today. It's been a pleasure.
Thank you, Andy. Thanks for having me.
Happy holidays. Have a good holiday
too.
season. Bye. All righty, guys. Bada bing, bada boom. That's the energy Ethereum thesis. We've actually heard a lot about energy this last couple days into last week. We had Daylight. We had a couple other kind of energy companies. And guys, I had been pulling up this book in the previous episodes, which is The Rise of America. If you guys are an American and you have not read this book, I think generally speaking, it will influence your investment decisions going forward, inside of crypto and outside of. There is a crypto and blockchain section in this book, but it also talks about a lot of the sectors that you see that are getting hot on crypto Twitter nowadays. So you've got gold, you've got energy to fuel the rise of America, critical metals, a short history of money, which is important to understand why crypto is important, and the rise of America will raise the rest of the world. Guys, if you have not read this book, it has influenced a lot of my investment philosophy with regards to the debasement trade, if you will, which is essentially the rise of modern monetary theory, which I think we are pretty much firmly into now, which is just a system of credits and debits. It's a bit deeper than that. And the Fed just kind of moving things around and stimulating and contracting as they please. It is leading to a remaking of the world order. Marin Katusa, really, really good author, guys. I would definitely check it out. Guys, up next, we've got McLean Wilkinson, the co-founder of Threshold, talking Bitcoin, Bitcoin Fi. This is one of the hotter institutional categories in the market today. So we'll get McLean up after I've just shilled you guys on a must-read holiday season reading. So why don't we bring him up and let's get the show on the road.
Hey, Andy. I added that book to my list.
Yes, man. Yes. I honestly, these kids these days, they can't even read anymore. So we just do the audiobooks, the audibles.
That works for me because I got a lot of toddlers running around, so not much time for sitting down and reading.
Nice, man. Well, first of all, happy holidays. I know it's kind of like the final week before people kind of slow it down, but it feels like a pretty just pressing week in crypto, given the market, given the state of the news. I had Lark Davis on about an hour ago. We're talking about how every week these days, there's just some news that in 2020, 2017, these would be groundbreaking, reality shattering pieces of news. But once again, today, Visa is choosing to use Solana for their stablecoin experiments. And it's just like, all right, another day in crypto land, I suppose. Very interesting market dynamics.
Institutions are here. Institutions are here.
They are. And they're gobbling up Bitcoin. They really are.
True.
And Bitcoin is the only asset in this entire market that had a bull run this year, other than Hyperliquid and a couple of random meme coins last year.
Yep, I think that's absolutely correct. It's been a strange cycle for a lot of reasons. One is the one you mentioned, where Bitcoin has been in a bull. Last couple of months, unclear what's going to happen, but overall, big time bull market for Bitcoin. And almost everything else, you're right. Like even stuff with traction and DeFi and everything else has kind of been this protracted bear market.
It's weird, man. And so you're the co-founder of Threshold. You guys do a lot of Bitcoin, what you guys call Bitcoin Fi. I generally think about this in a couple of different categories. I'd like to, dive into it. I think just to lay the context here, you've got this kind of contractionary phase happening, like we're talking about. We didn't really see any big altcoin runs. We haven't really seen a lot of traction outside of a couple of select crypto assets. So there's like this trimming of the fat. In our Telegram groups, we're seeing marketing departments kind of slowly wind down. We're seeing layoffs happening. We're seeing just kind of like a general reality check within the crypto native space. But then Michael Saylor goes and buys $1 billion of Bitcoin yesterday, and Tom Lee buys another 300 million. And Visa's, they're building stable coins on Solana now, and the SEC is saying that they're going to bring all markets on chain in 2 years. And the Nasdaq puts in something yesterday to do 23 hours of trading 5 days a week, and it's just this acceleration of institutional adoption of either the crypto technology or the way that crypto markets work. And it's really just a weird dynamic for the average crypto investor right now. What is it like from a founder perspective? How do you navigate this kind of weird state where the apathy in the crypto natives is so high, but the bullishness from the institutions is so strong, creating this interesting kind of like line in the sand?
Yeah, I mean, I think we're in an interesting spot where our user base serves, draws from both of those pools. So a lot of institutional capital is starting to explore DeFi and how to deploy Bitcoin, not just on their balance sheet like they have historically, but actually earn yield on top of that Bitcoin in interesting, novel ways, primarily on chain and through DeFi, but also potentially borrow against that Bitcoin. On the same hand, like we have a lot of native DeFi users who have been sort of our primary user base the last few years. Who are still very actively bridging back and forth between native Bitcoin and DeFi using permissionless protocols like TBTC, but also tend to have a lot of exposure to sort of the long tail of crypto assets as well. So like psychologically and emotionally, a lot of them are kind of in an interesting spot the last year or so.
So what is it that the institutions really want to do with Threshold? Like, what is it that the whales want? Because if I'm a Bitcoin whale, and I've talked to, about this with different kind of like Bitcoin-esque projects, and it's like, I want to probably borrow against my Bitcoin and not sell it. I want to do that in a tax advantageous way such that I don't need to pay taxes to go from like BTC to TBTC or BTC to WBTC. That shouldn't be considered a sale. If I've been holding this thing for 5 years, that should not be a sale of my asset and have to pay tax on that long-term capital gains to go to the same asset. And I want to do it in such a way that is like the closest to native Bitcoin as possible with the least amount of smart contract risk, because I've just had this thing in a ledger buried for the last 5 years. I haven't touched it. And it keeps me up every night. So why would I, risk that? And so that's kind of like my general mental model of like a Bitcoin whale or like an institutional capital allocator. Where did I, what did I get wrong? What did I get right? How do these people want to interact with Bitcoin on chain? What do they want to do with it?
Yeah, no, I think you're pretty much dead on. I think the use case and the value prop is almost exactly the same, whether you're a retail whale that has a lot of Bitcoin or your institution. There are some differences around like specific requirements in terms of compliance and workflows and things like that. But in general, we have like two primary things people want to do. One, like you said, they have a lot of Bitcoin, maybe with a low cost basis. They want to stay long Bitcoin, but they need some sort of working capital or cash, for whatever reason. They want to borrow against that Bitcoin, either to pull cash out into fiat, or just a lot of people want to lever up and go even longer Bitcoin. So that's one, being able to borrow against your Bitcoin, without, depending on your jurisdiction, triggering a capital gain. The other is wanting to generate some yield on top. So we have obviously the last year or two, just this entire new phenomenon of institutional like Bitcoin asset treasuries, regular operating companies that are accumulating Bitcoin. And now they're starting to explore what they can do beyond that to generate some additional yield and drive returns for their shareholders, particularly, as we've seen a lot of these asset treasury companies start to trade below NAV. They're looking for ways to kind of, differentiate themselves from the pack. And so on-chain yield and generating yield on top of their Bitcoin, on top of their balance sheet is one way to do that. And a lot of the most interesting opportunities are in DeFi. Whether that's LPing on dexes, some of the novel dexes like Yield Basis offering like very high organic trading APYs, or trading perps or doing all these various things on chain, farming new projects, etc. There's a lot of opportunities beyond just what they can do in TradFi, which is basically just lending out their Bitcoin in an unsecured way. So those are the two primary use cases. It looks very similar whether you're an institution or you're just a retail whale.
So one of the things that I understand about tokenization and just about generally, these institutions coming on chain is like they're looking for this distribution edge that they don't currently have with their given customer base. So that they look at Solana and they look at Bitcoin and they look at Ethereum, they look at L2s, Sui and Arbitrum and Starknet. They think to themselves like, there's this set of users here that if we tokenize our product, we can get exposure to this new customer base that would maybe want to buy this product from us. With TBTC, you guys just recently kind of like redesigned, rebuilt out your Sui, Arbitrum, Starknet. I think there's probably upwards of $500 billion of idle Bitcoin right now, just kind of hanging out. Does this expansion to different chains, this new minting directly, this new function, does this enable, like, what does this enable for you guys? Like, why was this such an important product choice?
Yeah. I mean, the North Star for Threshold and TBTC is for TBTC to be the standard for Bitcoin finance.
Yeah.
And that means TBTC is present in every market that matters. So all the major L1s, major L2s, basically anywhere where there is demand to deploy Bitcoin, we want to give people the rails to do that. And so the way we think about that is it should be as easy as possible and as seamless as possible to go from native Bitcoin to Ethereum L1 to Solana to Sui to Starknet to Arbitrum to Base, basically wherever you want to deploy your Bitcoin. We want to make that super easy and permissionless and seamless. So basically allowing Bitcoin to flow like water back and forth from native Bitcoin to whatever the destination chain is. We're not opinionated on like how and where people should deploy their Bitcoin. We just want to give them the best rails and the most secure rails and the fastest rails to do that. With the new upgrade to the app and gasless minting and direct minting to all these different destinations, that's just sort of improving the UX and making it super easy for that Bitcoin to move back and forth, to move from native Bitcoin to a destination, from that destination to another destination, et cetera, without having to sort of stop, basically do all this manual bridging and clunky UX yourself, and just making it super easy, super intuitive, and straightforward.
Yeah, man. Yeah, and I think that has resulted in this big TVL boost that you guys have had.
Yeah, I think
where that came from.
It's up pretty significantly since earlier this year.
How much institutional sales are you guys doing?
I think we do expect like institutional deposits are going to be the primary driver of TVL and volume for TBTC over the next couple years and months. So that's primarily where the growth is coming from, as these institutions, like I said before, are looking for ways to deploy their Bitcoin.
Do you have an institutional sales arm? Like, do you have like that kind of like?
We have a BD team, yeah. A small BD team.
Are they based in New York
as well? They're based all over. So and they travel a lot. So they're based. I would say they're based on the road. They're definitely putting in the miles, on the airplanes and getting all over the place wherever they need to meet people.
Yeah.
So that'll be a big piece for us. And then the other big unlock for institutions in particular, and this is kind of where we start to see some divergence in the needs, not necessarily these cases, but the needs of retail users and institutions, is around the custody of the underlying Bitcoin. So one of the biggest unlocks that we're going to have for TBTC very soon in 2026 is the ability for institutions to essentially bring their own custody and to be able to mint TBTC or borrow TBTC against Bitcoin that they're self-custodying with a qualified custodian. We think this is a really important unlock for TBTC from a compliance perspective, from a regulatory perspective, and that just matches sort of the sort of more TradFi or traditional workflows that a lot of these institutions will have. And so that will be, I think that will be bring a massive wave of Bitcoin on chain and deploy it into DeFi.
Yeah, man. I mean, do you think that there's a lot of Saudi money that's going to be coming on chain? Like, I think there's a lot of money over there. People will kind of write that off. There's a lot of Bitcoin whales over there. I think I think Larry Fink was saying that the sovereign wealth funds over there are starting to really allocate towards Bitcoin.
Yeah, I mean, I don't know the exact order of, what type of institution will come first, but there's
Yeah.
a lot of Bitcoin all over the place. And that's the beautiful thing of Bitcoin, right? Like, it is a better version of gold. You can move it halfway across the world instantaneously. You can't bring, $100 million of gold. Good luck trying to move that around. It's quite heavy.
No,
quite hard
exactly.
quite hard to get across borders.
Yeah.
Bitcoin can move instantly. I think we're already starting to see a lot of the digital asset treasuries, Bitcoin asset treasury companies starting to look to differentiate themselves. A lot of traditional, prop desks, hedge funds, certainly sovereign wealth funds, I think will probably are accumulating Bitcoin. I don't know that any of them, or any large ones at least yet, are doing that. So are doing that publicly. I'm sure it's happening.
Yeah, exactly.
And there's obviously a delay and a learning period. Once people get comfortable accumulating Bitcoin on their balance sheet, then they start to look, how can we actually deploy this?
Definitely.
So there's always a little bit of a lag, but I think we'll increasingly start to see more and more types of institutions and traditional players and large pools of money accumulate Bitcoin first on their balance sheet, just native Bitcoin, and then after that learning period, start to deploy it and to earn additional yield on top.
Yeah, beautiful. I think I saw something on Twitter that you acquired 2% of your token supply.
Yeah, actually more at this point. I think TBTC, if we execute correctly, is the rails that will unlock most of Bitcoin Fi.
Okay.
And so I think, given the price action of, alts in general, and I think Threshold in particular, especially when you map it against the traction that we've gotten over the last, over 2025 essentially, and the traction that we're poised to get with this bring your own custody and other unlocks that are coming up soon. Obviously I think the biggest proof point and way to display my conviction is, one, where I'm spending my time, which is on TBTC, and two, exposure to the value accrual asset for Threshold, which is T.
Yeah, it looks like market cap to TVL is about 1/5 ratio. That's looking in the positive direction. Let's see if we can get that thing up there. TVL, nice double, triple, quadruple here. Should reflect in the market cap. But the market wants to know, why would I hold this token? If it's just a governance token that has no rights to any cash flows from the work that you guys are doing, all the equity holders are getting all the profits. The hell am I holding the token for? You got Axelar getting bought out by Circle, and all the AXL token holders are looking around, wondering who's left to buy this thing.
I think
what's your viewpoint on this?
I think that's a great question, particularly the last couple of days. There's been a lot of interesting, and in many cases for token holders, unfortunate sort of events across the crypto space. I think the main thing with TBTC is there is no equity capture. All value accrual goes directly to the T token, and I'm that's why I'm buying the T token. We're introducing some interesting aspects for additional utility and value capture to T, one of which just went live, which is T staking. And the way that the bridge works right now is when you redeem TBTC back to native Bitcoin, the bridge charges a 20 basis point fee. But we're basically, with T staking, we're allowing stakers to deposit T into a staking contract and get instant fee rebates on that redemption. So this is actually a super interesting mechanism for market makers, for arbitrageurs who want to make money by arbing the price, any price differential between TBTC and native Bitcoin. They can stake T, redeem for free, and have this sort of special rails to go back and forth between TBTC and Bitcoin and capture any potential spread in the price between the on-chain price versus the price of Bitcoin. I think we're also leaning very much into vaults and yield-bearing yield generation strategies for people that want to earn yield on Bitcoin in just one click. And so we're launching a lot of vault, one-click deposit into a vault, earn yield, and Threshold will be earning a revenue share split with the strategists and the vault curators on those vaults, and that revenue will drive back into the token either via buybacks or potentially in the future some kind of staker distribution.
And that's with like the guys like MEV Capital and Avant-Garde and Enzyme and those kind of vault curators that you're working with there?
Yeah, exactly. So we're working with a variety of different vault curators and strategists who will deploy basically a menu of types of strategies. So some are purely on-chain, yield farming, LPing on DEXs. Others are doing interesting like delta neutral basis trading strategies.
Yep.
A variety of strategies sort of with different API targets and risk factors. that people can opt into a particular vault that fits the risk appetite and their yield target, and everything on the back end, the yield generation, the work of sort of doing that, deploying it on chain or deploying it wherever it's being deployed, is handled by the strategist, and so the depositor doesn't have to do anything. They just deposit, and then they sit back and let that happen on its own. Obviously, I think the bread and butter for TBTC is a lot of native DeFi users will continue to mint TBTC and then deploy it on their own. That's great. We want to support that. But there's increasingly a number of users who don't want to have to manage the logistics of managing everything on chain and generating yield themselves.
Yep. Cool, man. The last couple of things I have. One is TBTC available to use in Fireblocks and BitGo and in custodians?
Yes. So most custodians do support TBTC as an ERC20 token. A few of them support being able to connect your different custodians to different setups, but generally you can use Wallet Connect or something similar to connect to the dashboard and mint TBTC today. And then the piece that's coming up in early 2026 is the ability for institutional users to deposit their Bitcoin with one of these custodians that you mentioned, or several of these custodians that you mentioned, and then establish essentially an agreement with Threshold where they can mint or borrow TBTC against that Bitcoin that's custodied with their existing custodian. So this will allow institutions to basically bring their own custody and solve a lot of the compliance and potential tax concerns they have with the current architecture.
Beautiful. That's what I was thinking about too. Just from look, I'm a huge own your keys, own your coins type of guy. But man, I've found myself over the years just slowly starting to, either move capital into different asset classes, or just kind of slowly start to change the security structure just to sleep at night better, man. It's just oh my gosh, ledgers on ledgers on ledgers is it's an interesting dynamic. I would not want the institutions do not want to do. They do not want to see the OPSEC setup that we got going on over here. Anyway, last thing for you, is Bitcoin going to go to 1 million before 2030?
2030. That's a pretty long time frame. So I think the bull case for Bitcoin is a better version of gold. It's digital gold. You can move it around halfway around the world instantaneously. Good luck trying to do that with bars of gold.
Yeah.
I think eventually, yes. I don't know 2030. I don't know what time frame, but eventually, I think the arc for Bitcoin is that it replaces gold. And if you replace gold, that brings Bitcoin to around $1 million per coin.
Boom. McLean, co-founder of Threshold, thanks for your time, man. I hope you have a great day. I'm sure you're super slammed into the holidays with the family, with the work. So props to your work, and look forward to seeing you guys keep growing.
Thanks, Andy. Appreciate it. Happy holidays.
Yeah, man. Happy holidays. Merry Christmas. Talk to you soon.
Cheers.
Bye. Alrighty, guys. Oh, a little Zen grab there for the boys, huh? All right, we're gonna cover some of the stuff that we're talking about with Lark and McLean here on the screen. So we're gonna get that set up. I'm gonna take a quick breather, be right back, and we'll be ready to rock. So see you guys in just a sec.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to kalshi.com to trade today.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Havachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to havachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz.
Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again.
Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on-chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to kalshi.com to
Boom, boom, boom. Welcome back, guys. Man, I had to cover this one. Our boy Stani is winning. Shout out to Stani. Yes. Yes, Stani. Yes. Yes, my boy. We are winning big. 2025 is the year that we destroy the SEC one letter at a time. After 4 years, they're finally ready to share that the SEC has concluded its investigation into the Aave protocol. This process demanded significant effort and resources from our team and from me personally as the founder, who, by the way, he also just bought, I think, $10 million of Aave tokens publicly yesterday. So that was crazy. To protect Aave, its ecosystem, and DeFi more broadly, DeFi has faced unfair regulatory pressure in the recent years. We're glad to put this behind us as we enter a new era where developers can truly build the future of finance. DeFi will win, guys. Stani's winning, baby. Stani is winning. I mean, guys, it is hard to overstate how bad Gary Gensler was for this industry. I mean, he single-handedly ran us through many what seemed like unbreakable walls. And so here we are today. It's December 16th. Looks like Aave got this letter in early August this year. They're finally able to share that they've beat the case. They've beat the case, and you got to absolutely love to see it. So, guys, shout out to our guy Stani. Shout out to the entire Aave team for winning this. This is huge. This is massive for this team, for DeFi as a whole. So super stoked on this for them. And I just had to bring this up, celebrate it, and talk to our guy, Stani, about it at some point in the near future. On the next note, the SEC is making bigger moves and actually coming public. So let's go ahead and flip to the next one here. Our guy, Paul Atkins, the same guy that is calling for all markets to come on chain by 2027, I suppose, or early 2028. He's coming to deliver a keynote to Day One Digital Asset Summit presented by Blockworks, March 24th. We will be there. We'll be working the ground. We'll be doing live streams. We will have an amazing setup in New York by then as well, guys, which is still under wraps. TBD there. You guys are going to like that one. I tell you that. You guys are going to love the New York setup next year. It's going to, I mean, yeah, I don't want to spoil it. But man, how great is this? We had Hester Peirce on the show a month ago or so. We talked about the importance of this turnaround. And man, are they turning it around. They are really turning it around. So stoked to be there for this. And I'm excited. You know, I think that this is a massive milestone for our space. It is just so funny how the space has been built, predicated on kind of like anti-rules, anti-legislation, anti-government. Yet the biggest thing stopping us for this entire time was the government. So very glad to see a turnaround here, guys. I think we have a massive, massive boost in the overall market here, and stoked to see this play out. All right, moving on, guys, to the more technical and more adoption-focused stuff with stablecoins. There was a really interesting tweet that I saw. We're going to pull it up here next about the first stablecoin-funded check. So I wasn't really too familiar with what was going on here, but it looks like we have just completed what might be the first ever stablecoin-funded check payment. USDC to a paper check. I don't think I've written a paper check in my entire life since I was about 10 years old, 15 years old max. Don't really know who uses checks anymore. Then to a bank account. So direct end-to-end funding of check payments via stablecoins. If you're thinking, but why? The honest answer is because I thought it would be cool. And you know what? Sometimes some of the best innovations start with, I thought it would be cool. Definitely a bit absurd, and I wonder how widely this feature will be used if you want to use it. But I would say that the reality is that we have absolutely tons of vendors writing and sending checks on Ramp, and there's no reason why they shouldn't be able to fund these in stable coins. So basically what happened was they took a USDC out of their wallet that was able to be used to write a paper check and then go into a bank account. I assume was pulled out of the wallet into the check, into the recipient's bank account, using Ramp or using some different rails, probably some Stripe-oriented stuff there. So pretty awesome to see stablecoins experiments happening. This continues to be the bright spot in this industry, day in and day out, week in and week out. It's this tokenization, stablecoin-based primitives that are really, really growing this space. So I'm stoked to see it. And yeah, excited to kind of see how this plays out. Just wanted to share this with you guys. I thought you guys might find it interesting. All right, now let's get to the crux of the conversation today, which is tokens. Tokens versus equity. Let's go ahead and flip to the next one. Tokens are going extremes only? Question mark. Are they? Is Grant from Blockmates correct here? I think a major trend going forward will either be no token or tokenized equity. Anything in between will be uninvestable. So look, Grant, I think this is a rash take because of the state of affairs on the timeline. I think that this was a good take in the time being. I don't know that there's going to be no token or tokenized equity. This is to assume that there's going to be no more tokens that represent a token and equity. So I guess let's just take the term equity and not create a line to like stocks. Let's just do equity in businesses. I think he's right. I think the trend going forward is the token is equivalent to the equity and they're one and the same. There's not a equity in the labs and equity in the foundation. I think that is correct. What I don't think is correct is that there's either going to be no token or it's just going to be an equity in the stock market that is tokenized. I don't think that's the case. I think tokenized equity in Grant's case here. What he's trying to say is that if there is a token, then it will be equivalent to the equity in the company, not there will be no token and there will be a stock that's trading that is tokenized. Now, I could also see that happening, but I think that is what he meant. And that I agree with. Guys, this problem has long plagued our industry, again, because I think primarily due to the regulatory regime, due to Mr. Gary Gensler. I think this is going to be gone in the near future. I don't know how long this takes. I think it probably takes. It's going to take a massive unwinding of everything that we've done so far. So it's going to take. We'll see progressive change next year, relatively quickly. But I think to meet the norm is going to take multiple years. But I like the general direction. I think this 2025 has really just been like a purification of the space. And I firmly believe that. And so I expect to kind of keep seeing these types of trends ensue. All right, guys, last one for today. We've got Visa and Solana coming together. So let's go ahead and flip to that. Visa has announced, going all in on Solana. Going all in on Solana Breakpoint. This is a crazy tweet, man. This is nuts. So I won't be attending Breakpoint 2026 in London. I got robbed in London. I lost a finger in Portugal. I can't take another hit. Instead, I'll be fully present in real life, going all out to #1 Solana ecosystem in crypto. Life happens, y'all. Get a helmet. See you at BP 2026. Can't wait. Absolute savage tweet here from our boy, Louis Ivan, the CEO at Ryder. I mean, guys, there's been a lot of pushback about whether or not we should have this breakpoint in London. I mean, I think Mert was trying to catalyze a move to Tokyo instead for, various reasons. And yeah, guys, I mean, look, honestly, I've never been to a breakpoint. Breakpoint 26 in London sounds great. So I'm actually bullish on this. And I'm bearish on the migration that has happened into these large European cities. The immigration has been problematic from a lot of reasons. We won't really get into that now, but I think that this is going to be a great place. I think Abu Dhabi was probably a great place for it. But I ought to think that like the Breakpoint 2025 this year, while I'm sure it was fantastic, I ought to think that the sentiment was probably a bit down just because of the market and everything included. So guys, we'll see what happens. That's all that I got for you. It's been a good stream. Tomorrow we got a mega stream with Base. We'll be starting a little bit later. Big Coinbase event tomorrow. And yeah, guys, that should be fun. Robbie should be back tomorrow evening, be on the stream rest of the week. So looking forward to having that come on out. I'm closing out here, guys. It's been a good stream. See you guys tomorrow. Peace and love. Much love. Later.